there's a number of high growth names which had a spectacular 2020. And some of that surely was fundamentals, but a lot of that was positioning based on lower for longer interest rate view. And some unwind to that, I think, is long overdue.
You've been pointing our attention towards the shortage we've witnessed in the semiconductor industry with the chip demand story that's played out across personal computers, devices, everything that has been sought during a pandemic and then quickly switched across to autos. What's your view on the impact of that for the sector? Because we've heard of rolling stoppages and impacts on production for those that have not stockpiled chips at this point.
Yeah, it's an interesting point. I'm happy to disregard temporary disruption. I mean, it's not ideal, but it's expected to last a quarter or two, maybe. It's not something really that impacts the price too much. But I think what it shows that underneath it, the industry supply demand picture is very interesting. On the demand side, you have this economic recovery. You have growth in demand for autos coming in this year. You have a degree of industrial capex renaissance, if I may call it that. And that has more and more semiconductor content. You know, those machines, those cars are getting smarter. But also you have the structural growth trends. You have electrification of transport, of enterprise across the board. Semiconductors are the technical platform on which the systems run. You know, this is a really compelling combination of a structural and cyclical demand upswing. And on the supply side, if you look closely at what semiconductor industry is today, it's a collection of fairly disciplined, consolidated sub-industries. You know, specialist semiconductors that manage power, that manage radio signal, foundries, which is basically near monopoly for TSMC. They are very disciplined, consolidated industries. So it's a great combination for investors, tightly controlled, disciplined supply, and structurally and cyclically improving demand. We want to be positioned to benefit from we're not concerned about neither short-term disruption nor any short-term cyclical concerns.
Mikhail, just to add to that, though, there is the geopolitical overlay, and I hear what you're saying about some of the fundamental drivers here. But given that there is that additional element of semiconductors being in the middle of a power play between the United States, China, and other countries in that part of the world like Taiwan and South Korea and Japan, to what extent do you need to have a good exit strategy or at least a decent trading policy when it comes to how you manage any exposure you do have in the semis?
Yeah, you're absolutely right. Geopolitical risk is substantial. I mean, China-Taiwan relationships has never been more important in this context. And even though South Korea at the moment looks pretty trouble-free, you know, of course, there's North Korea risk. And Japan and South Korea had a bit of a difficult patch in their relationship just about a year ago. So we will see diversification in the industry. We will see more capacity being built in the US. I mean, the good news is we need more capacity. So this capacity needs to be built. If it's built in Europe and in the US, as it's likely to be, great. That just de-risks the industry a little bit, and it gives gives more business to semiconductor equipment manufacturers, which is another part of the value chain we're interested in.